Welcome back to Switzer on Australia's business channel. If this is going to be a good year for stocks and for many of your portfolios, we're going to need BHP and Rio to have a reasonably good year. So what's the outlook for commodity prices? Joining me to share his crystal ball is James Dunn from Dunn Media. How are you, James?
Good evening, Peter. Very well, thank you.
Now, mate, I know I asked you for the Switzer Super Report to really do an in-depth look at commodity prices, and always you delivered. So what's generally your feeling about commodity prices for 2014?
Well, very strong supply, Peter. That's putting pressure on prices in most of them, really. And that's the point that I made in the article, that a super cycle, which everyone said we were in with regard to China and its very strong demand for raw materials in the 2000s, a super cycle is still a cycle. And what we've seen is the behaviour of the metals area that we've seen so many times before, Peter, where high prices lead to new developments. They're commissioned because on the high prices they'll be profitable, and they always tend to come on stream at a time when the supply then comes on, and you have the flood of supply bringing the price down. And the adage goes that the cure for high prices in commodities is high prices, which works in reverse too. When you've got low prices, eventually the supply cuts back and you've got rising prices. So that always tends to happen in the commodities markets, and we're seeing that this year, particularly in the base metals and in iron ore, where the iron ore market's going to have to absorb 100 million tonnes of extra production just from Australia this year, and there could be more from Brazil as well.
Okay, so the price has been hanging around, what, 124 US dollars, and I presume China's demand is critically important to that. What's your view on this 124? How low do you think it might go from there?
Well, it's probably better than people would have assumed 6 to 9 months ago, Peter, to say that 122, 124 would be around at this time. You'd probably have been laughed at had you said that 9 months ago, because people were probably expecting something in the double figures. And there's a lot of projections out there that we will get to double figures in the iron ore price eventually. But it's held up pretty well this year. And China, you mentioned, look, obviously very important, but not just as a producer, sorry, not just as a consumer. It also produces, and like coal, you then have the situation where China's impact on the markets, not just its own demand, but its own production as well. So steel, but look, I think one good factor that people might be missing, and we're just starting to see, Peter, is Japan had very strong economic growth and demand for steel. Nippon Steel came out and said that the demand from its big, heavy customers like car makers and construction and engineering companies is the best it's seen in quite a few years. So Japan will be there resurging as an economy, picking up some slack. But iron ore, like most of the commodities, is going to face supply difficulties. Yep.
Okay. Let's be really gross here, James, for the sake of our viewers. What is your feeling about BHP, Rio and Fortescue this year?
Well, BHP and Rio do have that diversification, but they are on analysts' consensus targets. They're still well undervalued. So I think Rio Tinto is something like 23% below its consensus analysts' target price. So just if you want to follow that particular metric, Peter, you've got you could probably look at that and say, well, I'd be buying this at a price that the analysts think is good value buying. Same with BHP. Now, it's also worth mentioning at this point that, of course, for these companies, Peter, it's not just what the commodity prices do, and Fortescue is only exposed to iron ore. BHP and Rio have other exposures. But it's also what the Australian dollar does, and with a weakening Australian dollar, that's a good factor for these companies, and in fact is ameliorating the effect of the weaker commodity prices. So they are enjoying a lower Australian dollar.
Okay, James, well, you just stole my next question, but I'm really glad you're on the money. Let's just use that then, the dollar implication for coal. Coal hasn't been doing as well as iron ore. The last few years have been a bit tough. Is this dollar going to make it one or two coal mining companies look like good value?
Well, on that analysts' metric, we're looking at what analysts believe is the consensus target price. Whitehaven Coal, just on that score, Peter, stands out as the value buy in that sector. But coal, again, big supply difficulties affecting the price. You've got coking coal, I think, down 60% in the last couple of years, and thermal coal at 4-year lows. You've got, and you had a really interesting chat with Bruce Jakes about this too last week, didn't you, Peter?
Yep.
Where he was making the point that coal needs a few things to go right for it, and the Australian dollar is one of them. But the supply difficulties are in coal. By difficulties, I mean supply coming onto the market and not helping the price. Coal has that situation as well. So you've got worries for the commodity prices. They're not anywhere near as strong as they were 5-7 years ago. They can't be expected to be because, as we're finding out, Peter, a super cycle, it went for a long time, but it is still a cycle.
Yeah. Now, also, let me steer you into one of the scariest areas of all, base metals or industrial metals as they call them nowadays, and that scary company called OzMinerals. How are you going to sort of support this unusual company that can go up and down?
Well, that's right, and it is, again, if we look at analyst consensus target prices, it appears to be undervalued, as does Sandfire, as does Western Areas, which is one of the lowest cost nickel producers in the world. So we do have some attractive stocks seemingly on value grounds in that sector. Sirius is another, which is not yet producing, Peter, Sirius Resources, but a very, very potentially very large nickel and copper deposit that it's found. Again, in the industrial metals, the artist formerly known as base metals, you've got massive amounts of supply. The worst supply picture in the industrial metals for quite some time, affecting the price, leaving really only one direction for the price to come, and that's down, and they have been. But you do have some stocks benefiting from a weaker Australian dollar, looking to be a bit of value, like Sandfire, like Western Areas, and to a lesser extent Oz. Okay, one last one, mate. Oil. Is there a company there, after looking at the outlook for oil, is there a company there you like best of all? Well, Santos and Oil Search probably, but Woodside looking much more fully valued than those two. But then again, it's the behemoth in that sector in the Australian market, and has that gas scenario working for it very, very well. So Woodside, a very high quality petroleum exposure on the Australian market, but appearing a lot more fully valued than the others in terms of where the analysts think the price is going. The consensus target, which I don't think investors use enough, Peter, as everyone seems to focus on price to earnings ratios and dividend yields and NTAs and all of that, but it is from time to time instructive to look at just where the price is expected to go by the people who follow the company for a job. Yeah, it's a very good point. Now, mate, if people want to read your article, it's a Switzer Super Report, and you did it last week. Yes, I did, and we're always looking at the companies and the commodities, and just bear in mind that, look, nothing really goes on forever, and I know that there was a lot of froth in the commodities bubble for a long time, and you really didn't have to do much work as an investor to make money out of it, but unfortunately you do now. Yeah, without doubt. James, thanks for joining us. Thanks, Peter. After the break, we met a very impressive woman, the first woman to run a US television station or network, and showed the boys how to do it, taking USA Today, that was USA Today? I think it was USA Network, to #1. We'll see after the break.